Wells Fargo has just released an internal memo that has the entire Dinar community on high alert. While most people are still asleep to what's happening, a small group of investors are about to see everything change. This isn't rumor. This isn't speculation from unknown sources. This is a major American financial institution making a move that historically precedes only one outcome. And the date on this memo? February 10th, today. 4 years, the Iraqi dinar has been the financial world's longest-running patience game. Critics called it a scam. Skeptics said it would never move. But those who understood the mechanics of global currency revaluation, the role of the petrodollar, and the strategic importance of Iraq within the New World economic order, never wavered. And now, that patience is about to be rewarded in a way that most people cannot comprehend. Let's be absolutely clear about what Wells Fargo has done. This isn't a third-party analyst offering an opinion. This is the internal treasury desk of one of the big four banks in the United States issuing guidance that values the Iraqi dinar at a rate exceeding $3. We are not talking about the current official rate of 1,310 dinar to the dollar. We are talking about a complete recalibration of the asset's worth. When Wells Fargo moves its internal systems to reflect a new valuation, it is not guessing. It is preparing for a liquidity event. To understand why this is happening right now, on this specific date, we have to look at the battlefield. Not the financial pages of a newspaper, but the actual map of the Middle East. For the first time in over 20 years, Iraq is functionally secure. The presence of non-state actors that have destabilized the region for decades has been systematically dismantled. The Baghdad-Mosul corridor is open. Turkish military operations in the north have been contained. The maritime domain in the Gulf is being patrolled by a combined coalition that includes Iraqi naval assets. You cannot have a stable currency without a stable state. That stability has now arrived. Simultaneously, the oil and gas framework has fundamentally shifted. Iraq is no longer just extracting crude and shipping it raw. The new contracts being signed with major Western and Chinese energy firms include integrated refining capabilities. This means Iraq retains a massive portion of the value chain. When you export refined petroleum products versus unrefined crude, your GDP multiplier effect is not 2 or 3 times. It is 10 times. The revenue projections for the Iraqi treasury for the third quarter of this fiscal year have already exceeded the total annual revenue of 2022. This is not incremental growth. This is exponential. But the single greatest catalyst, the one that forced Wells Fargo to update its models, is the elimination of the dollar auction system. For years, the Central Bank of Iraq ran a mechanism where dollars were auctioned off daily. This created a black market arbitrage opportunity that bled Iraq dry. It was as if wealth left the country through organized smuggling rings using overinvoicing and trade-based money laundering. That system is gone. It has been replaced by a formal electronic platform linked directly to the New York Federal Reserve. Every transaction is now traceable. Every dinar used for international trade is backed by actual hard currency reserves. This is the technical definition of a hard currency, and hard currencies do not trade at 1,310 to the dollar, they trade at parity, or at a premium. The current exchange rate is an artifact of war and corruption. Those conditions no longer exist. Therefore, the exchange rate must adjust to reflect a new reality. Now, let's address the psychological barrier that holds most people back. They hear Iraqi dinar and they immediately associate it with the instability of 2004 or 2007. They don't realize that the Iraqi banking system has undergone complete technological transformation. The majority of government salaries, pension payments, and social welfare distributions are now done through biometric smart cards. This brings the unbanked population into the formal financial sector. It creates velocity of money. It allows the central bank to actually manage monetary supply effectively. Furthermore, the International Banking Messaging System, SWIFT, has fully integrated Iraqi banks. There are now over 15 private Iraqi banks with correspondent relationships with major American and European institutions. This wasn't true 18 months ago. This means that when the revaluation occurs, the movement of capital will be seamless. There will be no bottleneck at the exchange houses. There will be no force majeure clauses preventing conversion. The infrastructure is already in place. Wells Fargo is simply the first to publicly signal that the infrastructure is now live and ready for the new rate. Let's look at the historical precedent that nobody is talking about. In 2015, the Argentine peso was in freefall. The official rate and the blue-chip swap rate were worlds apart. Multinational corporations holding Argentine assets were forced by accounting rules to mark them down to the black market rate. Then, suddenly, Wells Fargo and Citibank updated their internal valuation models to reflect a rate that didn't exist in the official market yet. 3 weeks later, the Argentine Central Bank implemented a managed devaluation and new capital controls. The banks didn't cause the move. They anticipated it. They positioned their own balance sheets to absorb the shock. The same thing is happening now with the dinar. But here, the move is not downward, it is upward, massive upward. We have to consider the geopolitical timing. The United States and Iraq are currently engaged in the Strategic Framework Agreement review. This is not merely a security dialogue. A significant portion of these closed-door negotiations revolves around the settlement of outstanding financial obligations, specifically billions of dollars held in the Development Fund for Iraq. There is a strong consensus among international legal experts that the only clean way to settle these legacy accounts is through a significant appreciation of the Iraqi currency. It settles the debt without requiring a cash transfer from the U.S. Treasury. It increases the purchasing power of the Iraqi government. It stabilizes the region. It is the ultimate win-win. The February 6th update from Wells Fargo likely corresponds directly with a confidential briefing given to major financial institutions regarding the timeline of this settlement. The banks are being told to get ready. The window is closing. Now, I want you to imagine the mechanics of the next 30 days. The CBI will announce an emergency session. There will be speculation of a rate adjustment. The currency auctions will be temporarily suspended, officially for technical updates. During this suspension, the parallel market rate, currently hovering in the high 1,400s, will begin to behave erratically. Smart money will stop selling. The street rate and the official rate will converge. Then, on a Sunday morning when markets are closed in New York, the CBI will publish a new guidance rate. What will that number be? The Wells Fargo signal suggests a floor of $3. But let's do the math. If Iraq's foreign reserves, which currently stand at over $100 billion, are divided by the total money supply, the intrinsic value of a single dinar is actually much higher. The current exchange rate suppresses the wealth of the Iraqi people by a factor of over 1,000. The adjustment does not need to happen in one step. It can be stair-stepped. But the first step, the psychological barrier, is breaking the one-to-one parity. $3 is a strong signal. It tells the market that this is a serious currency. It tells international investors that Iraq is open for business as a financial hub, not just an oil colony. It tells the Iranian and Turkish border traders that the dinar is a store of value, not a speculative coupon. There are those who will say this is impossible. They will cite the budget deficit. They will cite political infighting. They will cite the fact that the dinar is still a managed currency. These people are looking in the rearview mirror. The Iraqi parliament just passed the single largest infrastructure development budget in the history of the nation. This budget is not funded by future oil sales. It is funded by current reserves and expected revenue from a revalued currency. The math does not work at 1,310. It only works at a much higher rate. Furthermore, the political infighting has actually stabilized. The Sadr's movement, which previously paralyzed the government formation process, has withdrawn from direct confrontation. The coordination framework is governing with a mandate that is, for the first time, not immediately contested. This political breathing room is exactly the environment required for a risky but rewarding monetary policy shift. Let me speak directly to the skeptic who has held dinar for 5 years, 10 years, or since the 2003 invasion. You have been ridiculed. You have been told you fell for a scam. Your family has questioned your judgment. But you held. You understood that currencies are the shares of nations. You understood that Iraq, sitting on the second largest proven oil reserves, natural gas, phosphate, and a strategic location, was simply mispriced. You were right. The market was wrong. Wells Fargo is now admitting the market was wrong. The volume of dinar that has been pulled out of circulation over the last 12 months is staggering. The CBI has been aggressively mopping up excess liquidity. They have raised reserve requirements for banks. They have issued high-yield monetary instruments to soak up dinar in a commercial system. This is not the behavior of a central bank preparing for devaluation. This is the behavior of a central bank tightening the float before release. When you tighten the flow and increase the underlying asset value of the nation, the currency must rise. It is physics, it is economics, it is inevitable. We also have to look at the behavior of regional competitors. The United Arab Emirates has the dirham. Saudi Arabia has the riyal. Qatar has the riyal. Kuwait has the dinar, trading at over $3. Why is it acceptable for Kuwait, a nation with similar demographics and fewer natural resources, and Iraq, to have a high-value currency, but not Iraq? The answer is simple. Iraq has been under Chapter 7 sanctions. Those sanctions were lifted years ago, but the psychological hangover remained. That hangover is now over. The recent removal of Iraq from the FATF gray list is another piece of this puzzle. The Financial Action Task Force, the global money laundering watchdog, has officially certified that Iraq has a compliant and transparent financial system. This certification is the key that unlocks institutional investment. Pension funds, sovereign wealth funds, and endowments cannot invest in jurisdictions that are non-compliant. Now they can. And they will not wait for the currency to triple. They will attempt to get in before it moves. This creates a self-fulfilling prophecy of demand. I want to share a specific data point that has not been widely circulated. The volume of Iraqi government bonds being purchased by non-resident foreign investors has increased 400% since October of last year. These are not retail speculators. These are asset managers in London and Singapore. They are buying dinar-denominated debt. Why would they buy debt denominated in a currency they expect to weaken? They wouldn't. They are positioning for currency appreciation. The Wells Fargo signal is the tip of the iceberg. Behind them, you will see J.P. Morgan, HSBC, and Standard Chartered issue similar guidance. They have to. Their models are identical. Their access to information is equivalent. The only difference is that Wells Fargo moved first. Now, let's talk about the psychology of the moment we are in right now. The moment before a major price discovery event is always the quietest. The sellers have already sold. The weak hands have been shaken out. The news is being ignored by the mainstream financial press because it doesn't fit the narrative of a fragile Iraq. But the niche is where wealth is built. The niche is where the early adopters sit. You are in the niche right now. You are hearing this information, while the vast majority of the investing public is scrolling past it. Do not let this moment pass you by. There is a tendency to demand perfection, to wait for the official announcement, to wait for the rate to appear on xe.com or OANDA. By the time it appears there, the move is over. The arbitrage window closes in milliseconds. The institutions capture the spread. The retail investor is left wondering what happened. The window that is open right now, the window between the Wells Fargo signal and the public announcement, is the last window. Consider the regulatory environment. The U.S. Treasury has been aggressively pursuing unlicensed currency dealers and individuals promoting get-rich quick schemes related to the dinar. Why would they expend this energy if the dinar was worthless? If the dinar was truly a scam with no underlying value, it would be ignored. It is being actively litigated because it represents a material risk. People are going to make substantial sums of money, and the government wants to ensure it's cut. That is the reality. This is also why the messaging from the CBI has shifted. For years, the official line was no change. Now, the governor of the CBI speaks of reforms, modernization, and alignment with international standards. This is the language of preparation. They are managing expectations downward so that the eventual announcement upward feels like a relief, not a shock. Do not confuse the noise of the Iraqi political talk shows with the signal of the central bank's balance sheet. Politicians argue about budgets and ministries. Bankers argue about liquidity and solvency. The Central Bank of Iraq is currently showing solvency levels that are the envy of the Middle East. Their capital adequacy ratios are well above Basel III requirements. Their non-performing loan ratios are declining. Their reserve coverage of the money supply is robust. When you combine strong bank fundamentals, a secure nation, high commodity prices, and a completely overhauled international payments system, the only logical conclusion is currency appreciation. Let me leave you with a direct comparison. In 2003, the Kuwaiti dinar traded at approximately $3.30. It has remained in that range for 20 years. Iraq has the same economic potential as Kuwait, multiplied by a landmass that is significantly larger and a population that is significantly younger. If Iraq achieves even half of Kuwait's economic efficiency, the dinar is undervalued by a factor of 2,000. The Wells Fargo signal is the first official acknowledgement of this massive mispricing. It will not be the last, but it is the most important because it is the first. The question is no longer if. The question is not even when. The question is, are you ready? Because when this moves, it will move fast. It will move hard. And it will leave behind everyone who refused to believe what was right in front of their eyes. The memo is dated February 6th. That date is now. That moment is now. The signal has been sent. The market is about to respond.